Hey everyone, I am David Sopransky, your host of Financial Revelations, the podcast about money and politics and whatever I want to talk about. You can reach us at 1-800-344-2534. You can hear me on WCRF 103.3 every Thursday morning from 8 to 9. It's in Cleveland, but you can listen on the Moody Radio App. My lovely wife, who's spending a few months in Florida because she's retired, listens on the app every Thursday morning. At least she tells me she does. I have no way to prove it. She's heard me talk for a long time, so if I say, did you hear the show today? She could say yes, because she's probably heard me say these things 1,000 times. You can email Corey, and this is all running below me, but you can email Corey any questions that you have, Corey@epsf.com. We've got a workshop coming up that I want you to be at. We've only got 100 spots, and we're getting a lot of calls on it. So, it's Tuesday, April 16th, 6 o'clock in the evening, Elyria, Ohio. Call the office, 1-800-344-2534 or 440-934-2195. Also running below me, I think, maybe. Corey will do it. Corey could do anything. We're going to talk about managing money in an election year, and we're going to talk about money. We're going to talk about the economy. We're going to talk about a lot of things. $15 a person, 100% goes to the Amazon mission trip that we're going on in June. And of course, you could see you could donate from nativosusa.org, nativosusa.org. You could see the mission trips. There's video on there. There's pictures. We dig wells for people, clean water. So I want to see you at the workshop, but remember, there's only 100 spots. So you got to call soon. It's going to fill up. Politically this week, some big things did happen that we got to talk about. And one is that the border protection bill that the Senate had come up with, Republicans in the Senate had come up with this. You know, sometimes I look at what they're doing and I think, do you guys understand what's going on at the border? President Biden is 35 points underwater on the border to President Trump. And what they were going to do, it did not pass. The bill didn't even come up for a vote because they didn't have the votes in the House. It was going to be dead on arrival. So they didn't even bring it up for a vote in the Senate. They didn't want to get embarrassed. But it's good that it didn't pass, because really what it did is it codified illegal immigration. What we really need, what it did is it capped the number of, we're going to allow this many illegals in a day. You cannot run a country like this. What we need on the border right now is a full stop. We need to just say, we need to put look, we don't have to be mean about it. We're not going to shoot people at the border or do anything like that, but you can't just walk into our country. You can't. The sanctuary cities like New York, Chicago, Boston, you name it, these sanctuary cities who said, we're going to welcome your immigrants here. You're safe here. There is no illegal immigrant. No person is illegal. Well, Texas and Florida are sending them illegal immigrants now. And they're saying, well, enough. We can't take any more. Hey, you voted for this. You got what you got. And at first I thought it was kind of a political stunt, but it was genius on these governors to do that. We need a full stop to this illegal immigration. We need immigrants. There's no doubt we need immigrants. We need engineers. We need doctors. We need computer scientists. We need a lot of people. But it's got to be legal. And if you'd like to read a living, breathing textbook, if you'd like to see a textbook being written right in front of your eyes, look to Europe. Europe has had unfettered immigration for a number of years right now, and it is destroying their economy. Europe is basically in recession, and that's what happens. All you got to do is go to Italy. I went to Italy one time with my wife. I did the radio show from the lobby of the hotel in this little hotel in Florence, Italy. It's one of the nicest places you'll ever go. The people, it's almost like going to Disneyland where everybody's nice to you, but at Disney they have to be nice to you. In Florence they don't, but they are. And the food, not a lot amazes me, I'll be honest. The food in Florence was amazing. It was amazing. There, you walk by these little alleys during the day, and at night, they're 4-star restaurants. It's crazy. But I asked somebody, my wife doesn't really love when I do this, but I do this all the time. I just kind of talk to people. And I went up to somebody, I said, so what do you think about the immigration here? It's like I opened up a can of worms. It was incredible. It was just incredible what happened next. And I got an earful for 25 minutes about what unchecked illegal immigration has done to Europe. And it's happening. You could see it happening. It's destroying their economy. So politically, we need somebody at the helm who's going to handle this. And it was Donald Trump before. When Joe Biden became president, they reversed all of his border policies. We had Remain in Mexico no longer. We were building a wall no longer. They sold the parts for the wall for 10% of the value. They're just, if you vote Democrat after these 3 years, I don't know what to tell you. We should pull the plug. I think you're brain dead. That's what I'm going to tell you. You're brain dead. So let's get to economics. Let's get to economics. It's the earnings season, and the earnings season's been pretty good. So companies come out, big companies, the banks have their day, the manufacturers kind of have a day, then technology's coming out, and earnings have been pretty good. But remember, it tells a story from last quarter. It's not telling the story from this quarter. So earnings have been pretty good. But what we have seen is weakness is appearing. We've seen UPS, 12,000 jobs. Microsoft, 18,000 jobs. Meta was a huge layoff. I don't remember the exact number, but DocuSign just came out yesterday with huge numbers of layoffs. It's happening. That you're seeing the weakness starting to appear. One of the economic data points that I follow is called the quit rate, and economists follow this. My degree's in economics, my background's in finance, but I follow economic data. That's how I build portfolios. But if you look at the quit rate, what the quit rate tells you is when it's high, when people are quitting their jobs and they're going to get other jobs, two things are happening. One, they have confidence in the economy that they're going to make more money or have a better position someplace, so they quit their existing job and go someplace else. The other thing it tells you is that the other place exists. They have a place to go. Most responsible people don't quit their job and hang out at the beach. They got bills to pay. I know in COVID, we were paying everybody's bills, but for the most part, that's over. It might exist in California, but it doesn't exist here. So if you quit someplace, you're going someplace, and you're going to make more money or have a better job. When the quit rate is low, people don't have that confidence level. And the quit rate is falling at a very fast pace. It's not the fastest pace ever, but it's a very fast pace. The other thing that I follow is just full-time employment. What's happening with full-time employment? It's down. We're negative on full-time jobs, and we're positive on part-time jobs. Most of the job growth in the economy right now is part-time work. Now, are we on the edge of a precipice? Are we about to fall off the cliff? Are things so bad that we got to make some changes? You better be getting canned food and putting it in your pantry. No, we're not there yet. And I'll tell you why we're not there yet. We're not there yet because this is just the beginning of the weakness. And I don't like to scare people. I'm not selling gold bars or gold coins or bunkers or anything like that. In fact, we have no sponsors for our podcast, so we're not selling anything. So I don't want to scare people unnecessarily. But I do want you to be concerned about a couple of things. Number one, the slowdown could be somewhat mild. And I think the Fed is seeing that. And the Fed's kind of in a box right now because we still have high inflation and low unemployment with a slowing economy. We're getting close to what we call in the economics world stagflation. And stagflation means a stagnating economy with high inflation. And that boxes the Fed out. So if the Fed cuts rates because we have a slowing economy, they jack up inflation. If they raise rates because of inflation, they slow down the economy even more. I think the Fed truly missed an opportunity in November of last year to raise rates one more time and to slow things down enough to create an opportunity to cut rates. The Fed chairman came out and kind of threw cold water on everybody last month when he said there are no rate cuts coming in March. And if there's no rate cuts coming in March, there are probably none in May. And I think they're going to do 3 rate cuts possibly this year. But they're in a box because if unemployment doesn't go up above 4.5%, they have no reason to. There's no reason to cut rates right now. The market wants them to cut rates because the market loves free money. I got a 2% mortgage. I'm basically handcuffed to my house right now. I don't want to sell my house and get a 6% or 7% mortgage. That would be silly. So those houses aren't going to move. You've just taken those out of inventory unless somebody has to move. So now you got 6.5%, 7% mortgages. If we had an average supply of houses on the market right now, the housing market would be crashing. I talk to realtors all the time. They'll tell you their income's down, sometimes half of what it was last year or when rates were really low. That would be the reason for the Fed to cut rates. But it's not bad enough yet to where they're cutting rates. And they're in a box. They're in a serious box. Chair Powell is going to have to pull a rabbit out of this hat. And again, I don't think we're at the precipice. I don't think we're about to fall off a cliff and go into a depression. But you don't need a depression for times to get pretty rough for people. They're already rough when you go to the grocery store and you think, well, what did $100 buy me 4 years ago? It bought you a lot more at the grocery store. You look at people's carts in the grocery store. If you go to Costco, you always see this. I call them cart gawkers, where people are looking at what you're buying. But just go to the grocery store, and while you're in line, just check out the amount of groceries that people have in their cart. It looks like a quick run. Like, hey, honey, would you pick up bread, milk, and eggs on the way home from the office? But every cart is like that. And why is every cart like that? Because people can't afford groceries. And we're in a presidential election year, so they're going to try and solve a lot of your problems right now, but don't fall for it, people. The minute that election is over, they're going to go back to who they really are. And who they really are is unchecked illegal immigration. If you make money, they don't like you. They want to tax you into oblivion. New York is spending $53 million. They're asking the state right now for $6 billion to handle the migrants. That's only half of it. Where does that money come? It comes from taxpayers. We're paying for people to break the law to come to our country. And again, we need immigrants. Nobody's disputing that. We just want legal immigrants. There's people waiting in line to come here legally. Why should they be pushed to the back of the line? That's not American. It's quintessentially un-American to do that. These people are quintessentially socialists, borderline communists. Can't let that happen. I got a listener question that I want to go over because I've gotten this one quite a few times recently. And it's about 401k. So it's very popular right now to have a Roth version of your 401k. And that means like in a traditional 401k, the money goes in, it comes out of your paycheck, you don't get taxed on it. And it goes into the 401k and it grows tax deferred. But when you take that money out in retirement, most people take it from the 401k and they'll roll it over to an IRA. When you do that, okay, there's no taxes, there's no penalties or anything. You're allowed to do that. It's a direct transfer. But the thing is, every dollar that comes out of that IRA is taxable to you. And if you assume room temperature, or when you assume room temperature, no matter who inherits that IRA, they got 10 years to bring it out. 10 years, that's it. If you do a Roth version of the 401k, the main difference is the money that goes in from your paycheck is still taxable to you. But it grows tax deferred, just like the regular 401k, and any growth that you have. So let's say you put in $100,000 over the course of your work life, and it grows to $300,000. 200,000 of those dollars are going to come out tax-free. It's never going to be taxed. You never have to take a RMD on it. It's easy to leave to the next generation. So is it a good idea to do that? Well, I have a 43-year-old who asked me, is it too late for me to do the Roth? And I would say, and they have 20 years in their current 401k. They've been working for a while, and they're going to be working. Their remaining work life is 20 years. So my answer is no, it's not too late. I think if you're 60 and you're going to work till 65, still not too late. If you're 64 and you're going to work till 65, too late. But the sooner you start the Roth version, the better off you are, because the value is in the growth, and you got to have some time for growth. The more growth you have, the better a deal it is. And I really do believe that Congress didn't know what they were doing when they passed this, because they're going to get no tax money on that growth. And I want you to think about this. There's 3 versions of the tax law. There's pre-tax, tax deferred. That's your regular 401k. It's pre-tax contributions, it's tax deferred, but it's all taxable when it comes out. Then there's after-tax, tax deferred, and I call it after-tax, tax-free, the Roth version, because, yeah, all of the money that goes in from your paycheck is still taxable to you, but it grows tax deferred and comes out tax-free. To me, that's after-tax, tax-free. Oh, I love that. I love tax-free. Anytime that you could keep money out of the tax code, you should think about it, especially if they're matching you. And then the third version of the tax code is taxable. So let's say you have a brokerage account at a brokerage firm, and you and your spouse are on that account. That's called a non-qualified account. All the money that goes in is taxable. And if you have a long-term capital gain or a dividend or something, it's taxable to you. Now, the reason to have those accounts too is because a long-term capital gain, if you're under $468,000, gets taxed at 15%. So if you're in a higher tax bracket and you want to lower your taxes by 50%, have a long-term capital gain. And I think you need all 3 of those tax codes if possible. If I had to throw one out, it'd be the regular 401k, because there's just no tax benefit there long-term. Well, there is a tax benefit because it grows tax deferred, but every dollar is getting taxed. Every dollar is getting taxed, no matter who has it, whether it's you, your spouse, your kids, your grandkids. Whoever you leave it to, they're getting taxed on it. A Roth is totally different. So I like that. I love that. I like it. I love it. I want more of it. I want more tax-free. So if you have time, I would absolutely recommend the Roth version of your 401k. That's where you got to be. The more money. So somebody retires with $1 million or $5 million or $10 million in their 401k, and they say, what's this going to be worth to me when I retire? I say, I have no idea. I don't know what the tax code is going to look like. The way we're spending money right now at the government, they're going to have to raise taxes. They're going to have to come after those 401ks and IRAs that are currently sitting there not being spent. That's why you need tax-free. That's why you need taxable. Why you need those joint tenants accounts with long-term capital gains. Hey, don't forget about the workshop. I want to see you there. I want to answer your questions. I'll stay till Corey's coming. She'll stay till midnight and answer questions. She loves to hang out late and answer questions. What's it like to work with Dave? Let me tell you just right now, it's awesome. It is. These Alyssa and Corey are so fortunate to have me. They don't know what they got, They're probably disappointed when they have to go home and leave me. I'm sure of it. I'm 100% sure. I am David Safransky, a real American, a true red-blooded patriot, and the voice you can trust.